All right, everybody. So we just got Rivian earnings today, and in the post market, it's down over $1. So I'm just going to go ahead and look right into their earnings report. So this is going to be their Q4. So they're basically reporting this in a 10K, which essentially means that we're going to get the entire year's data. So bear with me here. This is actually my first look at this. So you're literally going to see me react to this real time. So the first thing I always want to look at, I just want to go straight to the income statement. So I'm just going to scroll down here, see where that is. So let's see. All right, there we go. Stock-based compensation. Let's keep rolling down. So we got the balance sheet, statement of operations. Yep, this is what I want to look at. Let's just zoom in a little bit so you guys can see this better. All right, so keep in mind right here, this is in millions except per share amount. So this is basically saying everything is in millions except earnings per share. So let's see right here. Revenue, cost of revenue. So we're looking at 2022 right here. So in terms of revenue, they did 663 million. Their cost, however, was $1.66 billion. So right there, that should be red flags. Red flags everywhere. Red flags everywhere. So gross profit, more like a gross loss. So gross loss about $1 billion right there. Now, that is just the gross profit line. There's more. There's the operating expense. So now you have research and development of $402 million. You have selling in general and administrative costs of $393 million. So right off the bat, you guys can see that they cut back on here. So clearly this was much higher, but they're trying to cut back on these costs. But do note that their loss from operations right here is $1.8 billion. So it's actually a little bit less than the prior year's quarter. So keep in mind, this is just one quarter. Now, if we're looking for the entire year, so the 12 months ended December 31st, this loss from operations is $6.856 billion. So they are losing money at a rapid rate. Now, take a look at this. We have interest income. So they're actually making money from interest right here. But, they also have interest expense. So it's offset. But as we can see here for the entire 12 months, right here, they have more interest income than they do have interest expense. So that is a pretty interesting development right there. Now, let's just go ahead, scroll down a little bit more. I also like to pay attention to the weighted average common shares outstanding, basic and diluted. So you guys can clearly see right here, last year, same quarter, we had 510 million shares. Now we have 923 million shares. So this amount almost doubled. So that's not a good thing. I mean, shareholders are getting diluted like crazy here. Let's scroll down a little bit more, or actually let's scroll up because we passed through the balance sheet. So let's see. Oh, went a bit too far there. Okay, so balance sheet right here. We want to pay attention to this right here, December 31st, 2022. Keep in mind that the balance sheet is a snapshot in time. So this is how they're positioned as of December 31st, 2022. So if we're looking at cash and cash equivalents, this amount has gone down significantly. And that makes sense because we saw their operating loss. They had a massive operating loss. So same quarter last year, they had about $18 billion. Now they have about $11.56 billion. Accounts receivable, it's just gone up a little bit. Nothing too big. Inventory, we can see that inventory went up quite a bit. Other current assets, this is relatively flat. But if we're looking at total current assets, now we have about 13 billion versus what we had last year of about 18.5 billion. So we can clearly see that their asset positioning is getting reduced pretty quickly. Now, if we look at plant, property, and equipment, this just went up about, let's see, what is that? About 600 million or so. Operating lease assets, relatively flat. Other non-current assets just went up a little bit. So altogether, if we're looking at total assets, we're down. We're down from the last year. And that's just because, honestly, our cash and cash equivalents, this position has fallen down significantly. Now, let's go ahead and take a look at liabilities. So current liabilities, accounts payable, this went up almost double. That's not good. Accrued liabilities, this went up almost double as well. And let's just go ahead and look at the total current liabilities. You know what? This went up by almost $1 billion, a little bit more than $1 billion. So that's not necessarily good either. So here we have assets going down. We have liabilities going up. What does that mean? If you have assets going down and you have liabilities going up, that means your equity is going down. That is not a good thing. So let's go ahead and let's look at that equity line. So total stockholders' equity. You can see right here it was about $19.5 billion. Now it's about $13.8 billion. So we could go ahead and we could do a calculation here. We can calculate the book value per share. So if I wanted to calculate book value per share, I could do about 13.8. And then I could go ahead and divide that amount. Actually, let's just use the full number just to avoid any confusion. Let's do 13,800. We're going to divide that by the shares outstanding. So let's see. What were the shares outstanding? Right here, it's 923. So let's pull that out. Divide that by 923. So this is basically saying, hey, you know what? The book value per share is about $15. Now, let's go ahead and look at the actual assets. So we want to make sure that, we don't have a lot of these intangible assets. So if we're just looking here, I'm not seeing a whole lot of intangibles here. So that right there is pretty much, that's a plus, because this is basically saying, hey, you know what? A lot of this is hard assets. So, let's scroll down a little bit more. Let's look at the cash flow statement, because that's the next thing I want to pay attention to. So we're going to continue going down. Let's see, cash flow, right here. All right. So cash flow from operating activities. We want to pay attention to this column right here. So we're taking the net loss, which is $6.75 billion, and we're basically reconciling all of this so that we could actually get the net cash that came out of operating activities. So here we can see that we had a net cash outflow of about $5 billion in 2022. So that's about double from 2021. So that's not a good sign right there. So cash flow from investing activities. We also had a cash outflow here. Let's see, what else? All right, let's see. Cash flows from financing activities. Let's see. Proceeds from share issuance. This was the prior year. So none of this happened in the current year. So proceeds from issuance of capital stock. We had a little bit this year. So a lot of this happened last year. So if we're looking at net cash proceeds from financing activities, not a whole lot. It's about 99 million right there. Let's see, cash equivalents, and restricted cash at the end of the period. So we started with $18.42 billion, and now we ended up with $12 billion. So that's never a good thing, especially if you're seeing your assets go down and you're seeing your liabilities go up. So, long story short, what I'm seeing is a company that is losing cash at a rapid pace. So we calculated the book value per share, and you know what? The book value per share was about $15, but you have to consider that in the future, this company is going to continue losing money. So people factor that in. That's called cash burn. So this company is continuing to burn cash. So that essentially means that their equity is going to continue falling. And that means that their book value per share is going to continue going down. So this company, they're not positioned very well, in my opinion, because, they're in this macroeconomic situation that's not very great. And on top of that, they're losing a lot of money. So long story short, I don't think this is a good company. And in my opinion, I think that this could fall significantly further. Now, another thing that I do want to know is I do recall that Amazon does have some ties with them, so I do think it would be interesting to see how that plays out with Amazon with their stake in Rivian. So hope you guys enjoyed this video and have a good one.